And there's something there that made me want to short. Would have been a tough one. As much as I wanted to short, I got on a little late there, so nothing I can do. Yeah, there's that one candle that kind of reminded me of a blow off ish at around 7:15 pre-market. Gotta be watching the gap fill. On SPX. Yeah, we're pretty much in pure negative gamma still. Even on the daily, we're seeing it. Looks like it's pretty deep negative gamma just to start off the day. No charm impact. Right to VWAP. Man. So one of the things that I liked about that potential short was that we were at the POC, yesterday's POC. So it was like a naked POC. Wicked above it on that massive around 715. We wicked above it. And then we retested that wick. And then we've been going down ever since. Fortunately, I don't have any positions. I got on a little late. Currently hovering around VWAP. Still no trades. Not seeing much here. I kind of like this going down towards that 63.70 gap fill. But you can definitely see a VWAP bounce here. VWAP bounce. And then a possible short afterwards towards the gap fill. Not seeing anything. The positioning is kind of all over the place today. Not a huge fan of the look of it. But would like to see a run towards 63.70, 63.65. And then let's see how we act around there. No real charm impact. Here's a VWAP bounce maybe. Yeah, it looks like we may try to hold here. Looks like we're trying to hold. It's trying real hard. Try to VWAP. We're at both the NQ and ES VWAP. We're gonna go straight for the gap fill, I guess. But I'm not messing around with this. And 10 more points of gap fill. It's interesting because the gap fill will line up nicely with the value area low on ES. Eight more points on SPX. Probably see a bounce somewhere around there. Anyhow, overnight, we are basically long inventory overnight, and then suddenly on market open, we dump. Still got 5 more points, and then we'll see how it acts there. We're already at that value area though. I'd like to still see the gap fill though. I mean, we're so darn close. That is a very deadly 4-hour candle that's forming. I think missing the short was a big mistake today, so getting on very late kind of blows. It's one-sided sell. I took it on a few accounts there, so we'll see how it goes. Looks like I'm not tracking the right account here. Darn. Hopefully this thing prints. So there's a few things there. It wasn't just the SPX gap fill. Alma had a downside pivot there, and then on top of that, the straddle that was priced in. The straddle that was priced in was about 48 points. So from open, I think we opened just around 68. Oh, sorry, 64.20-ish. And with a 48-point straddle, it takes us basically right down to here. Let me get it up. I think I'm going to cut it out here, though. It's good enough for me. It could probably still run towards the POC, which will give it another 8 points from here, roughly. That was good enough. Looking like an okay close so far. Can't argue with that. I still can't believe I didn't catch the short. That's what really bothers me. And it was a decent scalp to go along there, but it just wasn't like that was a high probability reversion spot between the SPX gap fill and the straddle low, which is what the options at the money straddle was pricing in. 48-point move, and we've already moved 48 points since open. And then you also got Alma's downside pivot. Everything's still pure negative gamma. This might be an opportunity to long again. Four-hour candle looks pretty bearish. It doesn't mean we can't mean revert first and then run it back down. There you go. Now it's gonna go. I like that it gave a second opportunity to enter with that deep candle retracement. But I think all this is really just a scalp. Right, that knife catch was a scalp. We had a pretty decent entry there, but it was just a scalp. And I don't think it's going to go back to the high of day today, especially after seeing the 4-hour candle close. So that made for an interesting morning. A lot more entertaining than the other mornings. VIX is still dropping. Hey Koshik. Yeah, actually, well, I was pretty disappointed in my jumping on the stream a little late, but we were sent in a short and got on just a little late and couldn't really wrap my head around what the market was doing. So I missed the short, and I was looking for the SPX gap fill. Not to mention that the at the money straddle was pricing in 48-point move from open. So 48 points from 64.18 takes us to about 63.70 on SPX. And we basically bounced off that straddle low slash SPX gap fill. And I managed to get a reasonable entry there long. Mind you, I already closed out. I ended up scalping for just about 11 points, I believe, on ES, and just closed out because I think it's still just a scalp. 4-hour candle looks a little bit bearish to me, so I didn't want to hold anything for too long. How about you? How was your trades, if any, so far? Oh, that's interesting. I haven't even checked the news yet, so I'm glad you mentioned that. Oh, he speaks at 2:30. I see now. Yeah, for me, it's been straight negative gamma so far based on how OptionsDepth calculates it. And yeah, the positioning, it just seems to me a little bit all over the place. So it's nothing's really standing out from an OptionsDepth perspective for me. Ooh, is he speaking 10:30? Oh, interesting. I have him here at 2:30. Fed Pal speaks, but I'm using Financial Juice. I see Trump's doing a photo op at like about 10:15. Not sure if they're going to give him a mic though, so. So I took your recommendation of copying over the source code and getting some sort of GPT, or I ended up using Claude to convert the TradingView JavaScript code into PineScript, and it worked out really nicely. So now I got the bare bowl thing on the 1 minute TradingView. One of the things that I noticed though is that I guess you can pretty much see it on a candle. Yeah, that's true. It's a very valid point. But yeah, I got it working. I guess one of the things that I kind of was watching, so I noticed that you use the bull bear signal with a reference to the moving average that you have. I forget if you ended up using 20, but one of the things that I noticed was that the way they calculate it, it's really just based on how the candle ends up looking. So for instance, the most previous candle on the 1 minute chart, 1019, it's basically a massive bottom wick candle, hammerish. So it ended up printing a green bull bear bar that happens to be hovering at around the 20 simple moving average. So like, I like the way you end up using it with the simple moving average, because without it, to me, it's a bit of noise. I tried an alternate version of it that basically AI had recommended, and it gave me nothing that was useful. Then I tried, then kind of went down a little bit of a rabbit hole with the CVD, cumulative volume delta. And I've used that one before to help with divergences, but I find it's kind of hit and miss still. So I won't be using that. I just kind of, I have it on my 1 minute drawing just to kind of test it out. I tried an overnight trade, or not so much an overnight. Well, it was at about I think maybe like 7 p.m. around 7:30 p.m. And it just ended up, well, I don't normally trade overnight, so I was just kind of testing it out. I ate a loss, so that it was kind of crummy, because it kind of reminded me of the same play that I played, was it on Friday, where I had to stop at the lows, hoping the divergence between ES and NQ would hold, and it didn't hold. SMT didn't hold. Instead, it whipped past it and then it rocketed. So I was pretty annoyed after seeing that. I don't think the bull bear volume data was super great at that time either when I looked back, but it was almost the exact same thing that happened to me on Friday. But anyways, that the scalp this morning pretty much offset that. So now we're back to chopping around. All right, I see the 10:30 Pau Speaks video now. The Associated Press just the link to the Associated Press on YouTube was uploaded by Financial Juice. But it's really odd that. Oh, okay, here you go. Now my my times have been adjusted on Financial Juice. Oh, I use a 50K account, and I use I'm currently using Tradeify and FundNX futures. All 50K. Yeah, I think I have like a rolling subscription for my funded futures too. I gotta get back on Lucid. I think they had like some sort of sale recently, so I'll probably get back on that. But I'm just gonna work on these ones for now. And then I also have like one live account that I use with NinjaTrader also. The live account is not a prop firm live account. It's basically I made some withdrawals from my funded futures, and then I had some excess. So what I did was just throw it into a NinjaTrader live account just for trading. But for that one, a lot of times I use MES or MNQ to trade, and I'm not copy trading. I've had a bad experience with copy trading, so what I've started doing was just legging in with multiple accounts at various potential buy-in spots, if you will. So like, let's say I wanted 67 or 63.70 this morning. I would have legged in one at around like 63.73 on SPX, or well, it would be the equivalent of ES anyways. And then if we headed any lower, like maybe towards 68 or 65, I would have entered in another account. I guess like almost like a DCA, but not really. And because each account has a different entry. So it kind of spreads my risks a little. I think with these, oh, I also have, so um, uh, for the live account, I mean, I kind of do the exact same thing, but I don't take all my trades with the live account. I basically have like 3 different NinjaTrader chart windows open, and from there, that's how I execute. One is with the live, and then the others are with whatever prop firm I'm using at the time. So FundedNext and Trade8. And it's pretty easy to switch, but I mean, I end up having 3. Like you've used Trade8 before, or you do use Trade8 from what you told me. And at the top right hand corner, you can basically switch your accounts. Yeah, and you can basically do the same with NinjaTrader, but it's a desktop platform. And there's like a drop down menu for which account you choose, but I have multiple windows open so that I can trade the various different accounts that I have. I find it a little easier than using the drop down. Hopefully that's what you meant by the question. And one thing that I do find is when I trade the MES and the micros, I'm able to hold through a lot more and not have that tight stop loss that I would typically have on ES or NQ. Because like with the 50K account, it's a freaking nightmare to be trading ES and NQ, unless you get like a pretty close to a perfect entry. Like I think my pass rate is still only about, I'm gonna say like 20-25% on these 50K accounts. Are you with Trade8, are you using the copying that they offer on Trade8? I know with Trade8, it only really allows you to log in into one prop firm at a time, right? But with NinjaTrader, you can have like multiple logins at one time. Let's see here. We gotta load it up. Yeah, that's smart. Just use one account. Yeah, I think a lot of people wanted to hear about whether or not he's still considering holding rates. But he's probably not going to release any information on that based on where he's holding this meeting. Yeah, overnight was a little interesting, and I think I was kicking myself for the overnight trade. I try to front run it to some degree. Like I didn't have any real candles telling me, hey, I should probably go long. I generally don't try to trade overnight, but once the 4 hour formed, it was, to me, a good opportunity to try longs, and especially with like an MES or MNQ, because the 4 hour at the 6 p.m. candle, which would have closed at 10 p.m. Eastern time, it was like it closed a pretty decent doji. Yeah, I agree with you. I'm still gonna be shocked if they have one rate cut, just because I tend to use the U.S. 2-year yield as a proxy for the Fed rates, and for a while they were pretty reasonable, just hanging out under 3.6, and I think the current range is set at 3.5 to 3.75. So it kind of made a lot of sense. And then as we moved into late February, I think we were hanging out at about 3.39. So I thought a cut would be possible, and then the war started. And then once the war started, we just rocketed in terms of the US 2-year yield. I mean, we ended up hitting 4%, 4.00. But we're coming off now, and we're at like 3.84, 3.83. So I can see why the probability of a a rate hike for this year went up. But yeah, I understand exactly what you're talking about. If this guy is Trump's guy, he's gonna have to cut. But if he cuts, he's probably gonna have to hike within like a few months, I would imagine. EXY is still climbing, which is very interesting to see. I see the SMT and my eyes are open. But I don't know that I like it. Yeah, one of the cool things about yeah, I like Lucid because of that. That's pretty awesome. And they're well priced too. I gotta get on it, but I gotta pass these accounts first. So one of the things that I typically read in the morning is Alma's notes, and because she does like a note at about 9 a.m. every day on what she sees, on what level she sees as a potential like down spots, if you will, and or rejections. And she had a key level today at, I think, wait one sec. Yeah, she had her centroid. So she normally has a centroid, which is generally where price is more balanced, if you will. And then an upside pivot, a downside pivot, an upside target, and a downside target. And her centroid today was roughly where we opened up. It was a range between 64.17 SPX and 64.22 SPX. And I think we kind of just ran up, overshot a little bit. We ended up running towards 64.27 before rejecting, and came right down to her 63.70 level, 63.71 level, which is her downside pivot. And this is just some things that she sees structurally, based on her the various Greeks and derivatives that she takes. It's kind of wild to replicate it one day, but it's insane. I don't believe there's, so there is no SPY on OptionsDepth. I think he tries to explain why, and I think all the influential options positions are primarily taken on SPX. I think he said he was going to do SPY at some point, but I don't think he ever came around to doing that. But he does have the VIX. The VIX is interesting because see if I can. I'm gonna mess up everything. Give me one sec. I hate the interface to some degree. Is market maker positioning. So the upcoming expiration, I believe, should be this Wednesday. It Sensei has a weekly expiration, and kind of works because it's concurrent with, well, it happens to be lined up with the JPM collar restrike, which is happening tomorrow. So for the VIX, VIX is like pure negative gamma. Also, like everything is to the left of the block of the zero line, and 30 should roughly be the high. I think last night we almost hit 32. But yeah, once this expires and then you have the JPM collar expiration, there should be like a new breath of fresh air for the markets. So I don't know if you follow the JPM collar strikes at all. But I think you can see, give me one sec. I think oh, there it is. Here's the JPM collar strike, 64.75. Yeah, you can see one here. And then there's so it normally consists of 3 strikes. They have one that is a sold call at 7,195 SPX, and that's a sold call. So it's to collect premium. And then they have the one at 64.75, and that's a long put, 64.75. And then there's one more way down there, and it's 54.95, which is a short put. So it's just it's basically a hedge to their overall portfolio. It's the way I see it. And I think that's the way that the smarter people on Twitter explain it. But oftentimes, well, so this happens every quarter. And it's the last day of every quarter. So tomorrow would be the last day of the quarter. And then the next one would be June 30th or whatever the last trading day of the quarter is. And then they have one in September and then one in December also. And oftentimes you kind of get like it impacts the market, or it kind of locks the market in to certain levels. So once they expire, the market is kind of free to move again because there's less dealer hedging influence, or an option that is like 3 months away from expiration versus one that expires tomorrow. Looks like the SMT held reasonably, but I mean, you only got one candle pop. But it's ugly now. It's just grinding along. When you trade, do you typically trade at like, do you have like a scalping kind of style where you trade maybe 5-10 points on ES depending on what the volatility is for the day? Or do you like holding 10 plus 20 plus points? Like what's your average roughly, um, based on how you normally trade, especially in this environment? Yeah, if you're still around, let me know what your general trade style is. Like what the amount of points on ES that you typically like to scalp for. A downside pivot is and that straddle level, and the SPX gap too seems to be holding up really nicely. Yeah, so that divergence held really nicely. I didn't want to try that 63.70 again, but it would have played out nicely. Pretty low risk entry too, if you can get it. Five-point stop loss. 10 to 12 point TP. Gotcha. Yeah. That's pretty good. A true scalper. I find that whenever I try to hold for like 20 plus points, I get it every now and then, but oftentimes I would see my break even stop loss hit. I find that when I'm scalping for less points, probably like that 10 to 15 range, I do a lot better. And my accounts normally like rise up slowly. but I have a few trading buddies that that like to hold for like 100 plus 200 plus NQ points or MNQ points, and they do pretty well, and they're really good at holding. It's kind of nice, but their entries are, well, an example would be this 4-hour or 1-hour candle from last night. I think it formed at about 9 p.m. It was the 8 p.m. candle, closed at 9, and you get like that shooting star kind of look. And one of them was able to slap longs, and they rode it up to, I think, almost 400 points, 300 points. And then he shorted. Now this is like that was just based on a like the candle formation, and I think it was they were expecting a bounce based on the higher time frame volume profile levels. But they also like to short, or like this morning, a short for them would have been off the naked POC, which is yesterday or Friday's POC that has not yet touched. So I think he shorted 23,504 on NQ, and he just wrote it down to value area low, which I think would have been like another 200 some odd points on MNQ, which is quite nice. But they're really good at holding and trading overnight. You trade your stop with 2.5 point width to the last traded price, even after TP. Sometimes I would get more point out of risking just 2.5 points unrealized profit. Yeah, that's pretty neat. That's pretty awesome. Yeah, as long as you got a system that works for you, it's perfect. Oh boy. Yeah, I do. But there's a few things that kind of afforded me the opportunity to do so. And it wasn't specifically day trading itself. I think day trading, I feel like I still got a long ways to go. Feel like I can always improve. But when it comes to, I guess like the longer term trading style, like I think I made a reasonable amount trading crypto. I wouldn't call it trading. It's just more like a buy and hold. Yeah, and also did like a few renos and flip, and that also afforded me the opportunity to kind of leave the full-time job and kind of do this full-time. Just decent investment decisions that I held for a really long time. But day trading is kind of a different beast. Where I find that it's like a true mental battle. I used to be an engineer, civil engineer. And then I tried my luck on the developer side. just to say I gave it a shot after civil engineer. I joined the like a condo developer, and then stuck it around for about 2 years. Really didn't like it, and yeah, and then left, and I've been doing this for quite some time. Well, for like 2 to 3 years from a day trading perspective. And I find that most of my battle is less to do with strategy and more to do with like my mental state. Like it's a constant mental battle. Like there was no reason why I shouldn't have taken that long for the ES double bottom there or SPX double bottom. It's a very supportive zone, and positioning kind of justifies that it would be supportive. And we also had the SMT. Like there's no reason why I shouldn't have tried along there. Yeah, and I think we discussed this before. I tried like a bunch of different technical analysis, and then ultimately ended up with using the SMTs from ICT volume profile, because the guys that I was trading with over the past 2 years, 3 years, they also use volume profile, and they had pretty good success off of it. That's why I started using it. So I'm a little bit behind from learning how to read the volume profile the way they do and executing the way they do. But I also really like the gamma and the breakdown by strikes. And I found that helped a lot, especially when we weren't in a high VIX environment. Once we entered high VIX environment, I think it was a bit spotty. So it was very hard to use because there's many other flows that help drive the market movement. So but I'm pretty much a sucker for anything dealer hedging wise, or option gamma, options delta, or Zama, Valma, whatever you want to call it, the whole Greek spectrum. I think the options positionings oftentimes try to tell us something, and until I found I found Alma, and then that's when she basically analyzes all that stuff for us without telling us how she does it. And I think she used to advise for like Citadel and Bloomberg, but I don't think she does that anymore. She's just a prof now, I believe. Gex, that's awesome. And so I feel like what really kind of put me over like from a trading perspective, when I started seeing a little bit more greens and reds, is when I started using the volume profile, liquidity strategy. So basically using like previous day highs, previous day lows as the liquidity levels, or pre-market high, pre-market low as the liquidity levels, and then watch for like some sort of candle formation, whether it be like a shooting star or a hammer, doji, high volume doji, on like the 5 minute, 15 minute, or the 1 hour, and then playing those in the direction of the I guess in the opposite direction of the liquidity run, right? And that basically that's what basically improved my my pass rate from like the average 10% of 10% pass rate that I think most people kind of average with prop firms, depending on what their rules are, obviously. But yeah, and then it kind of like doubled. And there's times when I can hit like 30% pass rate, but it's very dependent on the environment. But now I'm just trying to tie everything together, see if this gamma stuff, along with the breakdown by strike, learning how to read that with the intraday volume profile levels and the liquidity runs. Yeah, there's like one guy that I watch. I think he's on his let me see if I can find his YouTube channel. Trading. Yeah, it's his name is Trading with Forrest, and it's at Forrest Force is his YouTube. And I find that the way his strategy was kind of like the one that I gravitated towards too, because the trading buddy of mine was having big success with it, and I kind of like use that as a base. He has a lot of videos running through his strategy, and he also trades live every now and then, but I find that his live streams aren't as great. But his YouTube videos, where he calls for the best trading strategy, mean reversion, like all of his videos regarding his strategy is pretty good. And that's what I used as a base, if you will. It has nothing to do with GEX, but everything to do with volume profile and liquidity levels. But I think they have like a Discord. I never joined it. Well, I tried their free trial, and then didn't end up staying for that long, just because I feel like they weren't really talking about the trade style on a regular, and Forrest's YouTube offers so much more. But yeah, I'm in love with GEX stuff like you, so I know exactly where you're coming from, and I want to make it work. coming down pretty good now after the divergence or the SMT played out alongside. So that support held really nicely. Not only support, I mean, you got SMT too on the 5-minute. You got SMT on the 15-minute there at the lows between ES and NQ. Even these candles were SMT and offered a pretty small risk here to go long, and we basically ran right up to value area high, which is perfect. So oftentimes, like if it's let's say a liquidity grab SMT, let's say you got an entry somewhere around here, I would normally play it to POC, and then if for whatever reason I believe that it might bust through POC, I might try for a run up towards the value area high. Which would have been an awesome trade today. Instead, I was in, I think, at around 64.17 ES, and I had taken it off at around 64.27. And then I had an MES that I was running in the other on my live account, and that I think I took off at around like 64.32. So it wasn't too bad. But the real play would have been off that SMT. But yeah, I find that typically in a high VIX environment, high vol environment, I'm normally a bit more trigger shy. See, and the range that we see here, I mean, just gonna go to SPX real quick. You're pretty much running a range between 63.71, a very tight range, up to 63.91. And if I pop up the options depth dealer by strike, or breakdown by strike, you can see 63.70 and the cluster up to here 63.85. Like, it's like a pretty reasonable 15-point range. Now the range, sometimes I would actually have the two negative strikes as the bottom and the potential top. But there was a few things here that had suggested maybe if this SMT had held at 63.70 SPX, it would have been a good long, and heck, it was a good long. And then at the highs, you have 63.90. 63.90 would have been right here. And then price action kind of just messed around there between 9.55 to about 10.45 before truly breaking out. And this blue area just happens to be where there's like a nice like positive gamma pocket, if you will, which is generally pretty supportive. Like, you don't, if this was all pure negative gamma, you'll probably stay in a negative gamma cluster. But once you enter like a positive gamma cluster, it's hard to escape, especially if it coincides with like really reasonable levels like the gap fill on SPX. But we ended up breaking out afterwards. So like I think the 10.55 candle broke us out all the way up to 64.11. Yeah, I think 64.11. So it would have done something like this, and then finally moved up. Mind you, it rejected again at 63.90 a little, and then finally moved up towards 64.10, which is the next major negative level. But to me, 63.90 towards like 64.10, 15, it's a bit noisy, but I love a good cluster, or a good edge of cluster. So that 63.70 would have been a reasonable long with maybe a 5-point stop loss towards 63.65. That's why I played the long initially, because at around that 9:45 time frame, I was just watching the market. I missed the short this morning. And I was waiting for it to hit this level. And then once we hit, it was pretty close to gap fill, which is why I would have given it a bit more, maybe to the bottom of this candle as a stop loss. And then I wanted to play it to the POC, and I think the POC at the time was somewhere around here, the 8786 on on SPX. Anyways, that's that. But yeah, with trading, man, you definitely go through that painful journey. Yeah, just looking at the gamma chart here, the gamma heat map, and one thing that Alma taught me on how to read this here, these little gamma influence levels. So this here is a gamma contour on the daily level, and one thing this tells us is that there's a put spread around here, a put spread. So someone, customer, is shorting a put spread, so it's a put credit spread, and they're collecting premium over here. So generally you should find that this area is a little bit more supportive, which is why I think she had set her pivot at 63.70-ish. If you look up here, there's a massive contour here. This is likely a short call spread, which is a call credit spread. So they're collecting premium on the upside here, which kind of like applies a ceiling on price action around here. And I mean, we got close to it. We didn't get right to it, but it was just interesting to see how the price action is kind of messing around in between these two spreads, which is essentially like an iron condor. Short put spread meets a short call spread, and collecting premium on both sides and confining price action between. So whoever put this on, it was self-doubt and self-taught. Yeah. I'm with you on that. I think every trader kind of goes through that same journey. And it's a lot of like self-reflection. Like, I think there's a few times that I probably wanted to quit. And a lot of it was just like staring at yourself in the mirror and saying, like, trying to figure out what you're doing wrong. But it's really, a lot of times it's really just execution, which is all psychological. Not taking the trades that you're supposed to take, and then when it comes, you doubt it. There's that mind game that we're constantly playing with ourselves, right? Because I'm a strong believer of any strategy essentially works. You can have a 30% win rate with a massive, like maybe 3 or 4R trade, then the stats work out in a way where you come out positive. Then yes, like you can come out on top with that, but you're gonna have to get used to losing because you only have a 30% win rate. And losing, I find, really affects your mental state when it comes to trading, right? So it takes, but knowing that stat, you should theoretically be able to come out on top. If you have like a 4R trade, if you're aiming for 4R and you have a 30% win rate. But I think for me, I hover somewhere around like 55-60% win rate, and my R is generally, I try to aim for at least 1R, but oftentimes I try to aim for 2R. But it's all dependent on what I see structurally on the price chart. But yeah, anyways, what I was gonna say was that I'm a strong believer that you can trade a moving average and still come out on top. If your mental state is correct. And I find that the self-doubt creeps in often enough. And a lot of times it's just trying to reinstate your trade process, whether like if you journal or if you record yourself. It's just kind of like trying to figure out what you're doing wrong all the time, especially when you go on a losing streak that is uncharacteristic of your trade style. Then there's a lot of like self-reflection, looking back, trying to figure out what the heck's happening, right? And there's a lot of self-doubt that kind of creeps in every now and then you have to like reframe things and reorient yourself mentally in order to trade again, right? fun journey though. It's very spiritual in a sense. It sounds corny, but it's spiritual. Is what I tell people. It's like if you ever want to know yourself, get into trading. You'll definitely find yourself. But this is brutal price action. There's a few scalps in there, especially if like I said, the low day is perfect. Value area low to value area high. There's a lot of confluence at that bottom, at that low too. But I think I'm gonna, like, I don't know that I'll take another trade just based on where we're hanging out. We're kind of like messing around in the middle. I'm not in love with anything here. 1000 tick over bot signal. Interesting. Do you swing trade at all? Or is it just day trading for the most part? Gotcha. Yeah, I do. I think I do a little bit of swing trading. Actually, that's how I first started. When I started back in 2015, I think 2014, 2015. It's hard to remember the time frame, but I did a lot of stupid stuff back then. But I think around 2018, 2019, I started to really learn how to swing trade properly. And I find that that's a lot of times that's where most of my profits come from swing trading. And having all the macro stuff in mind. That's why like I use a lot of options when trading, especially when things appear asymmetric. Like I think I had like an indicator of mine go off the end of December, and then again around towards the end of January. And yeah, I picked up, so my indicator basically says, hey, yeah, something weird is happening around here between VIX and VVIX, and something's not adding up, which is normally a sign for me to go short, like short the market or enter puts. And I entered puts, it felt like I was holding for a very long time. Like, I don't think I closed out until March, like March, the first week of March. And I've just been waiting and waiting. I think my entry on average was somewhere around like 69.30, 69.50, because I entered end of December and then again towards the end of January, I think. Let me see. Yeah, towards the end of January. So I had a decent average, and it was around like that 69, let's say 69.40 average. And I entered puts, and the way I selected the put expiration was typically February OPEX is where the markets get weak, generally speaking. It's I think if you ever heard of seasonality, a lot of people talk about seasonality. But the guys who do this for a living on the Wall Street side, there's like a few of them, like Chem Carson, who notes that typically during February, mid-February, is where the market kind of runs out of steam. So let's say on a bullish year going into the end of the year, generally speaking, the SPX is green from the previous year close. So if they're green, what they do is they reallocate their assets, they buy up things for from running into the end of January to the middle of February. And then once that happens, there's no more bullets in the market. Like, no one has funds left, basically, to reallocate. So they blew their load, and come February OPEX, which is generally like the third Friday of every month, and it's a major VIX expiration too, which is normally the third Wednesday of every month, and it creates this like volume void where there's not a lot of funds buying up the market, which is why you normally get some sort of weakness during that period of time. So the way I selected my so like if you look back, COVID happened in February. You probably heard that or seen it. Last year, the market started tanking also in February, and it's just like this structurally weak time frame in the year based on how all fund managers reallocate their funds. It's just something that's very interesting and worth looking at. And then oftentimes things reset at the next OPEX. So March OPEX, things reset. So for instance, for COVID, I think it's like the third Friday of February towards the, and then it bottomed out on the third Friday of March, and things just started moving back up. And oftentimes that happens. So I typically look at OPEX cycles, like the third Friday of the month, as when things generally clear up or get worse. But there's always like a change in characteristics in the market during those OPEXs. So yeah, just coming back to why I chose the expiration I chose, I ended up choosing, I believe it was April OPEX and June OPEX as my expiration. I gave it a lot of time for the market to kind of melt, because I think, generally speaking, the markets tend to melt during the midterm years. So this year is a midterm year, which I think this is something that Chemkar-san studied, and he flagged it on a podcast and said, hey, yeah, like the years that the market goes up happens to be the year that we have the US elections. And the reason why the markets pump up during those years is because whoever is the incumbent wants to be reelected. So previously, I guess that would have been Biden just pumping up the markets, showing how well he's doing in 2024. And the market theoretically should pump into the election. And then the following year, it's policy dependent, I guess, because last year we ended up going up because of Trump's general policies and the weakening of the dollar. And then now that we're in the midterm year, the average decline on a midterm year, I think, is between 20% and 50% is what he said. But now, this is his comparison was when we had our previous inflationary period, which is back in the 1970s. So he just compared midterm elections back in like the late 60s to early 80s, and all of them had a drawdown of at least 20%. This is why I like to swing trade. It's it tends to follow these cycles a little bit better. But don't get me wrong, day trading is you can definitely make a ton day trading, and I'm definitely not as successful as the few guys that I trade with, but those guys got onto volume profile a lot quicker, and it seems like their mental state is much better, where their neutral was. So they were able to kind of like milk the prop firms for what they were worth for a lot longer than I have. Like, I think one of the guys I trade with, he's banned from or not banned, but like he can't purchase any more accounts because they won't be paying him anymore because he reached their max cap. Oh man, that's such a great way to put it. Suffering from success. Yeah, I hope to suffer from that type of success. I never got to ask you if this is what you do full time, intraday trade, or do you have a full time job and what you do? Nice, that's pretty awesome. It's painful process. So my condolences for that. But I feel like you eventually come out on top. I find it shocking that you trade on Trade web app though. Have you ever tried Ninja Trader at all? Like I have this thing about using a web app. I'm not sure. Maybe I'm just like old school or something, but even with Top Step, I didn't really like it. Oh, I see. Yeah, that's a good point. Damn. Yeah, so this is generally how my like SPX chart looks like. You can kind of see the levels. The orange stuff is the orange and purple are Alma's levels. Um, Alma's the orange stuff is the daily levels that she gives at around 9 a.m. The purple stuff is weekly. But this is generally what I have on my SPX, along with the straddle low or straddle high, depending on where we open at every morning. So if the at the money straddle on options says like, hey, it's like $48 to buy, like it was today, buy an at the money call or an at the money put. It was about 48. It was about 48 today. So wherever we open, it means the market is pricing in a 48 point move down or up. And you can see that we didn't break out of what the straddle had priced in, which is why I like to draw these in. They're not always respected, but it's nice to know what the market has priced in the morning. Ooh, Sierra charts. That's interesting. I heard good things about Sierra chart. I think at one point I tried, I think Quant Tower too. I think they're pretty legit also. But they get all fancy. NinjaTrader looks old, really old. But it doesn't take too many resources, considering I can use NinjaTrader with my laptop that I had since 2014, 2015. So it's like a 10, 11 year laptop, maybe 12 years. And it can still run NinjaTrader and the trade copier for NinjaTrader, which is nice. Though I don't think they're like too resource intensive. But I've always, I never really liked web platforms. So like TopStep was when they moved over to TopStep X, I stopped trading with them. Like as soon as I blew up the account, I was like, oh well, whatever. I'll just trade with anything that offers Trade-of-8 data platform or NinjaTrader. Well, since they're the same company. Trade-of-8 has a desktop app? That's insane. I didn't know that. I always thought it was a web platform only. I checked that out. Yeah, so I think one of the reasons why, and now I don't know if the Trade-of-8 desktop platform allows multiple logins. So like if I'm trading with FundNX futures and Tradeify and let's say Lucid or My Funded Futures, I don't know if I will be able to log into all those and copy trade, or not copy trade, but take take trades on all of them without having to log in and log out. With NinjaTrader, I'm able to do that, which is quite nice. And I have my live account available too at all times. Interesting to see another SMT up here on the 5 minute, 15 minutes chart. Oh, well, no, actually, it's not an SMT. That's my apologies. I don't think it is. Yeah, there's no SMT. It's weird to see NQ just reject there. And ES. All right, yeah, take it easy, Koshik. I think I'm gonna cut it off too. Like, I don't like anything here. Price action's been garbage. Hopefully see you tomorrow or the next day.